All right, hey everyone, Mark here, Mark P Markets. Thanks for joining me for another Bitcoin video analysis. I'm sorry I'm running a little bit behind. I appreciate your patience. Okay, so if you're new to the stream, welcome. Here's the way this works. First, I'm going to run through the economic calendar very quickly. I'm simulcasting, so that means I have to follow house rules, right? As you know. So I will be on TradingView as well here, and you can follow the economic calendar there if you'd like. Then from there, I'm going to run through my Bitcoin analysis. As you can see, there has been some changes since my report yesterday. Hopefully you read my report, and we're going to talk about that. And then, of course, I'm going to answer your questions. Okay, so I want to keep this at 1 hour. So I will do my best to keep it at an hour. Sometimes, I usually go a little over, but I'm going to do my best. If I missed your question, I apologize. So now would be a good time to share your question in the channel. I see plenty of questions here on YouTube, TradingView. Good time to start sharing your questions so that when I complete my analysis, I can get through it. Also, if you would like to share what country or what city you're from, that's always a fun fact. Okay, so let's get this thing started. This is for educational purposes only. For investment advice, please consult a licensed investment advisor. All right, let me take off that slide and let's get into this here. All right, hey everyone. So you should be able to see me now. Let me adjust my microphone here. Hold on a second so you guys can hear me a little bit better. All right, cool, there we go. All right, you should be able to see my Bitcoin screen. All right, let's get going here. So first things first, the economic calendar. Now, one thing that's not on this calendar, I don't have the company reports. There are a number of big company reports reporting this week. You should be aware of that, okay? I believe Microsoft is one of them, and there's a few other big names. They can affect the S&P, and the S&P rules everything, in case you haven't noticed. So it's good to be aware, even if you're not in this document. Who cares? I don't trade Microsoft. Who cares? Well, Microsoft is a heavyweight. So if they report something good or something bad, whatever, the market's going to react, and it can change things very quickly. So it's important when it comes time to mitigate risk. All right. So that's one important thing. Make sure you check the calendar for company reports. Now, right, because I'm not going to cover that here. Let's talk about the economic calendar and see what we have this week. All right, so again, I'm just going to go for the important reports. Durable goods orders on the 26th, that's tomorrow in the US. That's really not a big market mover. All right, Australia Consumer Price Index, that's not a market mover. I'm going to skip that. On the 27th, we have Bank of Japan interest rate decision. That could move the yen, right? I mean, usually the other central banks, they don't move the markets like the Federal Reserve. All right, just something to keep in mind. It can affect a yen cross if you're in a yen cross. So just be aware of it, okay? On the 28th, let me see, US GDP. Okay, no one cares. Let's move along. I'm skipping a few things here because there's a lot of things on this calendar that are just not even worth mentioning, and I don't want to waste any more time. So let's see, on the 29th, we have German gross domestic product. Okay, not a big deal. On the 29th, we have the Swiss National Bank Chairman Jordan's speech. I mean, that could affect the franc, I guess, but that's not a global mover. On the 29th, we have European GDP for the European Union, and that's pretty much it. Okay, I mean, on the 29th, China non-manufacturing PMI, those numbers usually don't move anything. I skipped a few because they're not even worth mentioning. All right, they don't really move markets in any kind of major way. When I look at the economic calendar, and again, you can use the TradingView economic calendar, but when I use the economic calendar, I'm not looking for trade opportunities on it. I'm looking for ways to manage risk, or basically what I should be aware of. Are there any FOMC meetings? Is Chairman Powell testifying? Is there non-farm payrolls? Like, that's what I want to pay attention to, because those are big market movers potentially. All right. So let's move along here, and let's now talk about the Bitcoin analysis. Hold on. Let me go back to the channel here so I can see you guys with your questions. Okay, cool. So let me just say hi to a few people. All right, so I got Travel, good to see you. Kai, Eligius, hey, good to see you again. Mr. Plow, all right. Julio, Peter, Dan, Wedge, got the crew. Alex, Sean, good to see you all. All right, cool. Lothando, Mario, hey, all right, cool. What's that? Oh, that's on the bottom. Is that Will Reese? Oh, is that from Australia? Is that you from Australia, Will? Reese from Australia? I don't know. There's a lot of guys named Reese from Australia. Anyway, all right, cool. Hey, freeloader. All right, cool. So let's get this thing going here with Bitcoin. Now, if you read my report on TradingView yesterday, I mentioned a couple of things, and it's important to understand when I write those reports, I can't really get into a lot of details like I'd like to. So it might confuse some people, some of the points that I'm trying to make. So I can further explain them now. There's a couple of things that I said in that article, not about Bitcoin, but about the market in general. Right. And I made a couple of comments like it's not possible to beat an efficient market. Okay. But here we are trying to find winning trades. Is that not beating a market? Well, what I mean by not possible to beat an efficient market is typically using conventional information, you cannot beat an efficient market. Okay. It's priced properly, and markets are getting more efficient, not less, thanks to technology and payment for order flow and your friendly neighborhood market makers who love to make things better for you, right? So it's important to understand that markets are random, all right, which means no one knows where they're going, and there's no way to know where they're going next. Biggest mistake I see people make, beginners, is they're all trying to figure out the next move. Where's the next move? But that's incorrect. All right. No one knows where the next move is. The market will let you know what it is. So forget the next move. It's the move after that we're interested in. Okay. So the purpose of my analysis here and the reports that I write is to prepare for potential moves. I remember one guy told me he would make fun of me because he thought I was one of these fake gurus who would just, the market might go higher, it might go lower, or it might just go range bound. Right. But what I'm trying to say is that's true. That's what the market, that's what it does. Right? It goes higher or lower, or it goes nowhere. We want to prepare for potential opportunities and potential scenarios. That is our objective. That is my objective, to prepare. So I don't know what the next move is going to be. I don't care what it is. The market will do what it's going to do. I want to know what levels it may turn at in advance so I can prepare. My objective is to prepare, okay? Not try to figure out where the market's going next. Does that make sense? So that's what I mean by accepting that the markets are random, because they are, and accepting the fact that you cannot beat an efficient market, which means all the garbage that you consume, like oscillators and news and your favorite fake gurus and all the gimmicks that they put in front of you, all of that will only lead to a random outcome. You can get the same outcome from flipping a coin. You don't need to learn how to use a stochastic oscillator. Flipping a coin will give you the same result. That is the meaning of not being able to beat an efficient market. So then what are we doing here, right? I just talked about preparing and we're trying to look for trades. What are we doing? Well, I'll tell you what we're doing. We're looking for imbalances. They're temporary imbalances of order flow. Okay, we can basically call that sentiment, where there are too many orders caught on one side of the market. Those orders are your source of profit. Okay, people making mistakes on the wrong side, when there's too many of them and they're caught, like we're going to talk about here in Bitcoin, that is where your profit potential is. These situations are not frequent, especially on the swing trade magnitude. Now, I talk about day trades, and sometimes when there's nothing to do on the swing trade magnitude, you can look at day trades, but day trades require a very, very specific plan, and you have to have a very strong grasp as to the reasons why the opportunity that you're taking exists. Okay, because if you're just saying, well, because the oscillator, the one moving average went over the other moving, that's not a reason. That's nonsense. Okay, you need to understand it from a microstructure level. Are there orders caught here? Why would they be caught? Okay, and what happens when there's too many of them that are caught? They get squeezed, right? And that's an actual process that repeats itself over and over. So as a market timer, That is all I'm interested in. Those unique situations which carry a greater probability of a profitable outcome. And that's the best I can do in an efficient market. Okay. So you're not going to get that information from some oscillator oversold. Like, oh, look, the RSI says oversold, so it must be time to buy. That's not going to help you. All right. You need to be able to project levels in advance, and you need to be able to judge those levels or gauge them in in some type of context. That context is price structure, right? And that's what I talk about all the time when I'm talking about higher lows and higher highs and all that stuff. All right, so that's my first rant for today. Let's get into the Bitcoin chart. I know I've been talking too long. I haven't even started yet. Let's get going here. So Bitcoin. Now, when I talked about this chart, all right, let's open this up a little bit. When I talked about this chart on my TradingView report, let me pull up my little rectangle tool. It was basically fooling around over here in this little area, okay? And I said a couple of things. I said it's 38K is a minor support. Structure favors it to break, especially if the S&P breaks, because this thing is just another component of the S&P these days. If you don't know what that means, I don't know what to tell you, but this thing follows the S&P, all right? Thanks to you, thanks to your friendly neighborhood institutions, this thing's following the S&P. Look at the S&P reversal today, by the way. Anyway, so we were fooling around over here in this area, and I said that while the structure favors bearish activity, I said at the same time, it's a bad place to get short. Why? Because the risk of this going to happen in your face, this right here, a reversal, the risk was high for that in this location. So this is a great example of order flow getting imbalanced right in that area right there, okay? Right in that area. And there was a way to, at least, you're not going to be able to know that this reversal is going to happen in advance, but you know that it's a support area and buying activity is likely to develop there. So when something is obvious, right, even though the broader structure is bearish, when something's obvious, and like, oh yeah, this thing's a short, you're probably going to get squeezed, okay? Selling into a low is the same as buying into a high. It's a bad idea. It carries a lot of risk. So anyone that shorted into this thinking, oh yeah, I got this, right? My fake guru told me to go short. I'm short now. Oh, what's going on? Okay, now you have all this risk that you must face. Otherwise, get out and take the loss. But you know what people do, right? It's human nature. They hold on with hope. Okay, this environment that we're in is going to teach a lot of people that hope is not a good way to do things. Okay, the environment that we had previously, over the previous 2 years, that was full of stimulus and all that stuff, it reinforced a lot of bad behaviors or ineffective behaviors. Okay, people were just buying the pullback. Well, let's just buy the pullback, and it worked, and it worked, and it always worked. Just buy the pullback. Kramer, let's open a hedge fund and just buy pullbacks. That's all we have to do. I'm not talking about Cosmo. I'm talking about Jim Cramer. Okay, I had to rehearse that actually. But you get my point, right? This environment is going to teach people that hope is not a strategy. You need to be prepared in advance, and you need to understand where your risk, what your risk is. Trying to grab a little profit or reacting to things is not a good behavior if you're taking a lot of risk. Okay. So here's the thing. Bitcoin has this massive reversal candle that's unfolding right now as we speak. Should we react to this? Well, no. First of all, let's talk about the location. I don't like this location. All right, this is not 35K. It's still coming off the 38K. Now, the location is less than ideal, which means I would categorize this as a swing trade. If you were going to take it, I would categorize it as aggressive, because this is pretty much a random location. Okay, and anything can happen here. This thing may go up a bit and then turn right around again, right? Because you're going right into this resistance. Now, at the same time, if you want to talk about this as an aggressive long, because you have this is a nice setup, okay? And these setups don't occur frequently. So while the location is less than ideal, there is a quality setup there. All right. I mean, again, this is basically like a triple bottom. It's a failed low, right? You have this failed low twice. It's a pin bar. Actually, the open to the close, this is not exactly the ideal definition of a pin bar, but you have a long tail on it. It serves the same purpose. So what to do here? Well, I mean, I actually may call this trade as an aggressive swing trade long, because there is some potential going into this resistance here, right? So first step is the candle must close. Once the candle is closed, I will then look at the high. This thing is trying to push the candle highs right now. What is this thing at right now? 43.42. The high is 372. So it's trying to push that high, right? The candle needs to close. Now, once the candle closes, this thing is going to define your risk. The risk is pretty wide on this thing. All right, that's the thing with these wide candles, with these long candles like this. That's what, 2,000 points about? That's at minimum your risk on the swing trade, at least 2,000 points. Usually you have to give it a little more room. So maybe 3,000 would make sense. Some people have 3,000 points. I'm not going to take 3,000 points of risk. I'm not going to lose 3,000 points. Well, you adjust your size, okay, to that magnitude, so that, you know, if you have to take the stop, it's not going to wipe out your account, right? When we send these out, it's usually 1% risk, 2% risk, something like that. Now, as far as the reward potential goes, here's why it might be worthwhile. So let's say this thing closes right here. Let's just say, for example, right? So, and let's say the buy stop is at 40.5, right? 40,500. So the resistance up here is 42,000 something. What is the high over here? 42,220. So you figure 42.5, that area, right? That's the most we should expect, okay? Now, while anything is possible, it's unreasonable to expect Bitcoin to start taking out these highs, especially in light of the S&P situation. Okay, the S&P is not going anywhere anytime soon. Have you seen the dollar index? We're going to take a look at that in a moment. In the bond market, I saw a question about the bonds, but this market, this environment is not supportive. All right, so we may get some good company reports here and there. You may see some temporary rallies. You're going to see some nonsense. You're going to see some hype and some fake gurus. I'm sure there's some right now saying that Bitcoin's going to 100K from here. That's all nonsense. No one knows where it's going. All we know is it's reversed off of a minor support, and there is some profit potential. That potential can be measured by this resistance. That's it. So if I'm risking 3,000 points, I need to make at least 3,000 points. Well, you know, in this situation, if I buy it at 40.5, you know, 42.5 is only 2,000 points. So that's not exactly 1-to-1, right? It's less than 1-to-1. So I would actually need it to go just a little further. That's the problem with this, right? So, you know, I don't know what to tell you. You can keep the stop at 2,000 points, and basically you're just going to have to, I don't like to use this word, but you're going to have to hope that it doesn't pull back and test that low. And, you know, keep your risk basically around 2,000 points, because all you're looking for is 1-to-1 on something like this. And that would take you up to this area here. Okay, if you can get that. You know, again, in these situations, when you have a profit target like that, just because you have a target anticipated doesn't mean price will get there, right? I'm sure people were calling for Bitcoin going back to 50K when it was doing this here, right? And what was I saying? Not touching this thing into a resistance, right? That's what I was saying. So here at least we're lower. We're a lot lower, right? And there's some profit potential. The thing is, going up into these areas, like I said, anything is possible, but the chances of that are low. So why would you take that chance, right? So that's what you have to consider for something like this. So it's either that, you try to play that game, or you wait for 35K, right? Which is still a possibility. Now, one thing, the point that I want to make though, right, I just kind of forgot there for a moment, is if price turns earlier, we see that all the time. Price may get to this point and then produce a sell signal. That is when you must be proactive. Okay, I can't hold your hand in those situations. You must recognize, oh, a sell signal. I'm only, you know, I only have 500 points of profit in this thing. What should I do? You should get out and take the money, right? Because if you get a sell signal after a buy signal so quickly, that is not what you should see. Now, of course, there'll be times when it fakes you out, but it's the risk that matters here. Okay, and we're not in a friendly environment. We're not in an environment where you're just going to get those mindless buyers, because all that money that was pushing that is no longer around, right? The Fed is no longer supplying this market with confidence and free money. So you need to understand that, right? So if it turns earlier, you need to be prepared to adjust. If you get confused, or if you're like, well, I don't know, at least put your stop to break even or something. Okay, that's all I can say. So that's my Bitcoin analysis. I know it's a little long, but we do have a potential trade idea developing here, but it's not the best quality. Okay, so that's why I would classify it as aggressive, which again means it may turn quickly on you. It's not likely to go very far. A more conservative trade idea would be at 35K. So again, people say, is it going to go to 35K? I have no idea. The thing is, I let the market tell me. If it goes there, I'm prepared to do something. What am I prepared to do? I'm not going to just step in and buy it. I'm prepared to look for a buy signal. If the market confirms and gives me that signal, now I could measure risk. And at that point, I can decide if I want to take that trade and measure my profit potential and all that stuff. And that's when the swing trade comes together. Otherwise, I do nothing because I trade rules. Okay, I don't react to things. Does that all make sense? Okay, so let me get to your questions now. If you have questions about anything I said, just please put them in the channel. I'm gonna, try to get to as many as I can. Again, if I miss your question, I apologize. So TradingView, I live from Brooklyn. I love people from Brooklyn, even though I know you don't talk like that. I just like to do the impression, because at one time they all used to talk like that in Brooklyn. All right, in Jersey they talk like that now. All right, see, look, where is the next move? 35K or 72K? I have no idea where the next move is, and I don't pretend to know. I'll let the market figure that out and all the fake gurus. I'm prepared for the move after that. 35K, if it gets there, like I said, I have something to do. Okay, if it doesn't go to 35K, then I have to reevaluate at some point. This point right here is an aggressive idea unfolding. Okay, so anyway, let me jump over to this chat real quick. Again, I'm going to try to get to everyone's questions. Okay, so Travel, I answered your question in the chat. Kai, all right, NDX. So here we go with the market, right? NASDAQ, NDX. So now NDX, let me pull that up here. NDX, I don't like to use this chart, all right? It's very, as you can see, it's a little sporadic. So you can go to the CFD, which is the NSX, right? It's much more, as you can see, it's a little more complete, because obviously this thing, it's a product that trades. So now look what's happening here, and the S&P is going to look the same. All right, I warned people. In fact, I sent out a chart earlier today, and I said this is not a place to short, and that's when the market was on the lows, and I said not a place to short, because look where we are. Okay, so this is an ideal area for at least a reversal to materialize. And as we can see, it's trying. The market's trying. This market's still open, but that's a pretty decent reversal, right? As far as a temporary squeeze in everyone's face, it's by no means a change in structure. We have a clear-cut lower high right there. All right, so I would anticipate that this market is not going to go very far. So what do you do in this situation? Well, this is great for aggressive swing trades, perhaps in certain NASDAQ stocks. They're going to look very similar. Look, I'm willing to bet Apple is going to look very similar. Let's take a look at Apple, right? Real quick, as NASDAQ leader, Apple. What a surprise, right? Bullish pin bar. So like stuff like this, that would call for like an aggressive swing trade long. But, and you can use the NASDAQ or the NSX as your gauge, which is what you should do, rather than just looking at the stock in isolation. So in this, here's the NASDAQ again, what to expect on something like this. And you notice Bitcoin is doing the same thing, right? So again, limited expectations. How far can this thing reasonably go? You have this old support right there. What is that price? 13,729. So you can basically, there's a couple of ways you can evaluate this resistance. You can look at this area right there, all right, and say, okay, if price gets back into that area, high 13s, good place to start taking profits on your aggressive longs, or possibly look for shorts, which I would be open to. All right, especially you can do that with options. Option strategies would be like nice way to control risk if you don't want to take like the outright CFD or futures. Or you have this area up here, which would be the failed high area. Okay, again, talking about imbalance, that would be a place where there are too many people long, right? Everyone gets long thinking party is back and they get caught, right? So those would be the two areas of resistance that I would be looking for on this thing. Is it going to go there? I don't know. The question is, if it goes there, I want to be prepared. I want to have a plan. I'm not going to react. I'm having a plan, right? If it gets to a resistance and I see the reversal, oh, okay, I was anticipating that. Now I can start, putting the trade idea together. So that's what I'd be looking for. So again, for aggressive swing trades, this would be a good place. So before the market closes, perhaps like on something like Apple, for example, right? I mean, you want to get in early on Apple before it closes, you can take that chance. It's aggressive. It's very aggressive because, you're not waiting for the candle to close, but the idea is you wait for the close, tomorrow it breaks the high, and that's your buy signal, right? But you may be able to get a little head start on that. I mean, what other stocks are going to be showing something like this? What does Google look like? All right, let's take a look. All right, same idea. You're seeing these reversals across the board because the NASDAQ is a reflection of all these, right? Does that make sense? Okay, so let's move along here. Good question. I hope that answers your question. All right, what's your opinion on Barrick Gold? All right, so before I get into gold, whenever you talk about gold, you should look at the dollar index. Look at the dollar index, right? This looks like an altcoin. This thing looks like Luna, right, before it turned on everyone. This thing looks like Rune or those other garbage coins that everyone bought at the top. Look at this thing. This is nuts. This is a reflection of interest rates, right? Have you seen the bond market? Let's take a look real quick. I saw a question about the bond market. You seen the bond market? Right, and someone asked about this little bounce. I'm going to talk about that in a moment, but this is a bearish trend, all right? And this little bounce is meaningless. So dollar index, higher high on the dollar index, bearish for everything. So the reason why I bring that up is because gold is going nowhere as long as the dollar looks like that, right? So now you say, oh, but the dollar, how much higher is the dollar going to go? It'll reverse somewhere over here. It might pull back, but this structure is clearly bullish, higher lows and higher highs. So until this structure changes, I don't expect anything out of gold. I don't expect anything out of anything that trades against the dollar, right? And that means Bitcoin also. So let's take a look at gold. Now, Barrick Gold is obviously a gold stock, but let's take a look at gold, the CFD. Look at this, right? Inverse to the dollar. That's how gold should behave in the face of a strong dollar. How about oil? Let's take a look at oil real quick. What is the symbol on oil? WTI. Look at the oil. Oil pulling back a bit. Now this is a consolidation in oil. It's reacting. It looks like it's reacting to that strong dollar, but this is actually a bullish consolidation. But anyway, back to gold. You're following a gold stock, then you're going to need to pay attention to this. And gold is pulling back into a support area, but you're fighting a very strong dollar. So this support is likely to break, right? So I wouldn't be buying gold here, all right? Or gold stocks, if you're looking long term, okay, well, at least you have a low. Let's take a look at Barrick Gold. The symbol, what is that? Gold, Barrick, right? I know it's right, it's over here. Barrick Gold. So this is Barrick Gold, right? I mean, look at that, getting hammered. Now, let's take a look at the weekly chart on it. As you can see, it was rallying recently. The gold stocks will have a tendency to do their own things because obviously it's a gold company and they're going to have other variables that are moving the stock, right? Not just gold. But as you can see, with gold getting hammered, you have to understand that these things are going to be vulnerable no matter how nice they look. So you have this higher low potential pullback, but you're fighting a strong dollar with these things. So if you're going to get involved with something like this, right, or if you're looking for accumulation levels, even though there's a bullish pin bar here, I wouldn't put much weight into that. I would look for support levels, right? Where are the supports on Barrick Gold? Well, you have one basically here, but that's not like a major support, right? Yeah, the pin bar is trying to develop. So what do? Again, if you're looking to accumulate, you want to take a bite, but your real support is here, right? This old resistance here, which is what, $20, $20.30. Right now you're at 22.86, 23. So you have some room to play with there, right? So if you're looking for, you can put it this way. If you're looking for an aggressive swing trade, you have a possibility there, but you're fighting a strong dollar and you're fighting gold that is likely to break that support, right? So if that breaks, doesn't matter how nice this pin bar looks, it's going to break too. So the more conservative thing to do would be wait for this support area, all right? And then look for some type of reversal there. In an ideal situation, a double bottom, not just a single candle, because you need some sort of stability, especially in the face of a strong dollar. So something to keep in mind. You may argue and say, but the trend is bullish, right? But the trend is not going to be bullish for long with the dollar doing what it's doing, right? These things are going to have a hard time, in the face of that strong dollar. Does that make sense? All right, so let me move along here. So that's a good question. All right. Hey, Todd, can you please have a look at Euro? I also asked on YouTube, but some messages. Oh, okay. Yeah, Todd, it depends. There's like a filter on there, and sometimes it cuts people's things out. Sorry about that. But yeah, let's go to Euro. Right? At least you're clever enough to ask on TradingView. So this is the inverse of the dollar, pretty much. Okay, it's the inverse of the dollar index, making a lower low. Now let's take a look first at the weekly. Now with the dollar doing what it's doing, this would be something to be looking for shorts. But do you want to short it at this level? This is not a good level, right? Look what you're shorting into. So just like that obvious Bitcoin situation where I was saying Bitcoin is generally weak, but you don't want to short into the lows, that's the same situation here. So what do you do with this? Well, you can consider it from a couple of perspectives. If you want to consider the long perspective, obviously you'd be anticipating a dollar pullback. Look where you are. This is failed low territory. This is basically, like I was talking about, imbalance. This would be an imbalance area, right? That would be the type of area where you look for that. Now, there's no reversal signal there. So there's no reason to buy that thing right now. But of course, if the dollar pulls back, this thing is going to bounce a bit. Trying to get into that bounce, I mean, really, you should wait for some sort of confirmation. Stepping into this would be a bad idea. There's no reason to step into this. Now, the other more conservative thing to do would be look for the short. So you want to wait for resistances, right? You have a resistance there. That's a pretty clear resistance. There's a couple of ways to define resistance. That's one simple way, and that's the 109.36 area. So you could basically say 109.50 area. That would be one resistance area, right? If price can work its way back up there, that's a couple of hundred pips away. So it's going to require some time and some patience, right? You also can do the proportions and measure like an entire structure like that, and it pretty much gives you this area right here. Okay, I'm not going to talk about the details about that. People that know what I'm talking about, they know what I'm talking about. But you have this zone right here where you can also be open for selling activity, right? As long as the dollar maintains that bullish trend, this thing is going nowhere. Now, just to kind of give you an example, look at this price action right here, right? I'm sure that confused some people into thinking, oh, we have a bullish trend in the euro. No, we don't. Not with the dollar doing what it's doing. So even though you have a series of higher lows here, and it tried to make a higher high relative to this high, as you can see, it only went so far, right? So, if you can get another structure like that, that took a number of weeks to unfold, a number of weeks before you got to that type of level. But during those weeks, look, I mean, there were some selling opportunities. You just, had to make adjustments or they weren't worth very much, okay, looking at this after the fact. So basically, all we can do now is you have to look ahead. You have to look at resistance levels. The resistance levels are going to be where your higher probability opportunities can unfold. Selling into lows like this is the obvious thing to do, and it's an extremely high risk thing to do, as you can see with Bitcoin. All right, that squeeze in everyone's face, no one sees it coming. All right, so good question on the euro. All right, let me jump over to the other chat. Let me see what I got here. All right. So I went over Barrick. Okay. Mr. Plow. So here's the question about the bonds. All right. Now the bond market interest rates. This year's a 10-year note futures, and the question is, I guess this is not yet the reversal you said to look for, since rate hikes have not even begun. Right. So here's the thing. This is nothing. This is just a blip. Okay. When I talk about the bond reversal, right, when we see the reversal in the bonds, that's where we're going to start to see things change. And that's going to be the time to start investing and trying to get in at the bottom of the next broader move higher, whenever that is, right? The bonds to reverse can take months. So a blip, a 1-day candle is meaningless in that regard, right? So keep that in mind. The bond reversal I'm looking for at least weeks or months. When I spotted the reversal back in August, it took weeks to unfold. Weeks. I'm going to say that again. Weeks. All right. So we have a long way to go. And another thing is the rate hikes that Chairman Powell has been talking about, that's priced in, right? That's why the bonds have been so weak. That's all priced in. So when he actually raises the rates, you're not going to see any reaction, because markets are a discounting mechanism. They price things in the future, right? Perception of the future is being priced in now. So market is usually 4 or 5 months out. Now, here's the thing. The market is going to be evaluating what he says during the FOMC meetings, right? Is he going to continue to raise, or does he start changing his words and say, well, I think we raised enough, right? The market's not expecting that. So if he raises 75 basis points or 100 basis points over a couple of meetings, right? And then the third meeting comes around and he's like, yeah, well, I think we're going to take a break on the rate hikes. The market will like that, okay? And the bond market will rally on something like that because it's not expected, right? But usually the bond market knows things in advance because smart money trades bonds, right? That's why the bond market will usually do things before he comes out and says things, because it's anticipating. It pretty much knows what he's going to do somehow, some mysterious way, right? I wonder how they know. So anyway, so something to keep in mind. You can't, when it comes to the bonds and it comes to interest rates, it's not a one-to-one thing, right? You can't expect, change in the bond market. Oh, we're going to have a change everywhere. It takes a long time for it to factor in. So we have a long way to go. I hope that answers your question. All right, but that's an important question because the bond market is basically where everything begins, right? And who's basically behind the bond market? The Federal Reserve, right? They're behind interest rates, the bonds, interest, Federal Reserve. They're the ones that create environments that are friendly or not friendly. They have to raise rates. Like, oh, they're so bad. Why are they doing this? They're going to make everyone poor. No, they have to do this to save the country because inflation ruins countries, in case you don't know. So it's the Federal Reserve. It's not their job to regulate the stock market. It's their job to regulate the money supply and control inflation. That is their job. So they're doing their job, right? And we have to accept that. All right. Aqua. Freeloader wants to see Aqua. Let's take a look. Aqua. What is that? Is that a stock? He says it's a stock. All right. Let's take a look. Aqua. All right. First thing I want to see is the weekly chart. What's going on here on the bigger picture? So nice general bullish trend. Look at that. Higher lows, higher highs all over the place. Okay. This is a New York Stock Exchange stock. Now, we have a double top situation that's established in the more recent price activity, right? We could say the midterm trend. You have this double top, and we can characterize this as a, people go, oh, double top, bearish. No, it's not bearish. It's a possible consolidation, right? A lot of times, if something is going to stay strong, when the market pulls back, right, or has a dramatic pullback, relatively strong stocks don't necessarily follow along. They'll consolidate, right? That's a sign of relative strength. So, I mean, at this point, I wouldn't do anything with this here because look where you are. You're in the midpoint of the range here, okay? So the more conservative thing to do is wait for it to see if price can test the range low. Now, I don't know if you're interested in a swing trade or if you're interested in inventory. Again, inventory is something that you can accumulate at any level. It's really the matter of how much you accumulate and what your overall objective is, right? And how quickly you accumulate it. That's what needs to be controlled, because that's how you control your risk. But as far as a swing trade goes, you have this little mini double bottom situation right here, and that can be confusing, but I would not take a swing trade on that. This might be more ideal for a day trade. I'm not going to talk about day trades. So you want to look for other support levels like this one or this one. Look at this nice example right here of what I'm talking about when a market stabilizes. You see that right there? So the common mistake, I'm bringing this up because we looked at what we were talking about, market pulling back before and then buying that initial bounce. That's what everyone does. They buy the initial bounce, okay? And as you can see, when you get a retest, that is really a nice situation where you get that imbalance, because you're going to have shorts piling in. They see the lower high, they think the lower low is coming, and then they get squeezed, right? That's your profit opportunity. So that's why it's nice if you can wait for one of these. These situations don't occur frequently. So, now you may say, well, we have one right now, right? This is sort of a double bottom situation. Yeah, but look at the location though, right? The location from this previous one over here. I mean, if you look back, look what it relates to, right? That was a support. That was a clear support. Here, this area, while it's somewhat supportive, I mean, you can argue that it goes back here, but it's messy. Okay, it's messy. It's messy, and you're also fighting a stock market that's no longer favorable, right? That's the other thing you have to consider. These things don't trade in isolation. So if the S&P has limited potential, these stocks are probably more likely to test supports. Does that make sense? So in this environment, I think it makes sense to just be patient and wait for better supports. And you have a couple ahead of you, right? You have this support here, which is what, $40, 40 and a half, and then you have this one back here at 36 and a half or whatever. So those would be the levels to consider. If you're aggressive and you want to go for this aggressive swing trade setup, I mean, that's aggressive. And again, you're fighting a stock market that is, limited. All right. So I hope that answers your question. Thank you for asking about Aqua. Steve wants to see Dogecoin. Dogecoin. All right. No one, haven't heard from that one in a while. Talk about garbage meme coins. Oh, look, that's why. Okay. So let's take a look. Again, meme coin. It's probably being hyped somewhere. So when you see something like this, right? First of all, let's take a look at how this thing measures up on the weekly chart. So, you have this situation, looks like a higher low, nice reversal structure going on there. I'll give it that. But these things don't trade in isolation. There may be some specific hype on this thing that's getting this thing all excited, right? If you're not in on that and you're not in before this move, right, then you're chasing it. So you can't buy this now, right? You're, first of all, buying into a resistance. It's trying to change its structure, but you have all these resistances ahead of you. So not worth the risk, in my opinion, right? And you especially don't want to buy at the high of a vertical candle like that. Because as you can see previously, look what it's done, right? It goes vertical and gives it back. We are in an environment. Don't lose sight of the environment. We are in an environment that does not support any sustained rallies, especially in highly speculative garbage coins that have no real value. Make sure you understand that, because a lot of people are going to get sucked into this, right? There's probably some fake guru in some chat room somewhere. Oh, Dogecoin is going to 10x by next week, and it's going to make early investors billions of dollars, right? Some moron is probably saying that, and people are believing it, right? Meanwhile, he's getting out on them. So don't get caught up in this nonsense. If you want to get involved in garbage coin, at least find a support, at least, right? You have a support here at 1328 or whatever. That's a support. Perhaps it tests that again, all right? Again, with Bitcoin being as vulnerable as it is, and the limited potential, you can't be aggressive with these things. So let it go and find another support. Now, if Dogecoin is going to have some kind of major sustained move, because who knows, maybe they have some kind of fundamental nonsense going on, whatever, right? And people are going to continue to buy it, then it should clear this level here, That's what it should do. And then it should retest the level, right? Clear the level and then retest. And that would be an aggressive swing trade long if you're into something like that. As far as investing goes, I'm the wrong person to ask about these things because I think they're all garbage. I think most of them are going to go to zero or go nowhere because they provide no real value. And we're not in an environment that supports a speculative frenzy type of thing. When we get easy money again and the Federal Reserve starts to turn its agenda around, then maybe we'll see some parties back in this sector. But if you're going to do anything in this sector, stick to at least the leaders like Bitcoin, Ethereum, that kind of stuff. All right, hope that answers your question. All right, let's move along here. I want to try to answer as many. I know I'm slow on these, so I apologize, but I like to talk. I talk too much. I know. All right, ACX from Julio. ACX, let's see, what is ACX? Be at home. Okay, this is on the German stock exchange. I think, let me just check to see what other exchanges. Yeah, it must be that one. Yeah, I don't see anything here for US except for that other one. All right, so this seems to be the right symbol. Now, look, on the chat, I'm like behind on the chat. So if I put like the wrong symbol, I probably won't see it. If you try to correct me, I probably won't see it. I have to like specifically check, but I'm assuming this is the right symbol. All right, so ACX, real quick. I want to check the weekly chart first because I want to get a sense of the bigger picture. As you can see, this thing has given back a lot, right? And it has a double bottom in place. At what price is that? $11 basically. It established a double bottom and it's trying to do something here. Now, this is on the German exchange, but it's going to follow the S&P basically. Everything follows the S&P. You have a lower high situation. So I wouldn't, this is not a good thing for a long. All right, you look at the general structure's bearish. All right, and people that buy into this are going to most likely get caught. If you want to get involved, at least wait for another test of low. Let's go to the daily chart. Okay, test of low is likely. That is, again, the $11 area. Right now you're at 15. So you can argue that there's a higher low consolidation, yes, but the general trend is not bullish. Okay, these higher low consolidations, like this entire, we can argue that this entire area is a consolidation. If I'm going to go for a long, I like to see those within a bullish configuration, like a bullish impulse wave. And basically this is the wave 4 of it. I prefer something like that. Okay. This is a bearish configuration. So, I wouldn't be too excited about this. If you're aggressive and you think it's going to break this resistance, well, you can hope for the best, but the structure doesn't favor that. So the conservative thing to do, wait for the test of low, if anything, if you want to do something with that. But again, you're fighting a tough environment all around. Does that make sense? Okay, so I hope that answers your question. I see a large question here. Okay, so I got that one. While I was making 30K in oil back in February, I was telling my friends to stop trading Bitcoin. One of my traders lost 100K shorting Bitcoin. I don't short Bitcoin. I follow trends, which is stronger than what most people do. I agree with your philosophy. I haven't touched Bitcoin for months. Not worth the risk, right? Well, following trends, that's basically what that's how an investor benefits, right, from a trend. But a trend can be tricky at times, right? And you may have to sit through some situations that can be very uncertain, even though the trend is still intact. It can get complicated, as I'm sure you know. But all right, nice job though with oil. Okay, could this rally just be a short squeeze fake out? Well, yeah, it's just the beginning of one. If you're talking about Bitcoin, short squeeze fake out, yeah, but short squeezes are buying opportunities. If it's going to fake out, the thing is, it's got a little room, right? It's got a little room to play with. That's why, I would consider it aggressive. It's not at the greatest location and resistance is not too far away, but there's some potential in there, right? So if it's going to be a fake out, the likely fake out levels are up in here. Okay, I mean, it could fake out anywhere, but that's where the probability favors the fake out, is up in those areas. So here, there's some room to play with. It can turn, we can have a red candle tomorrow, and that's where you have to make adjustments. There's no way to know with any certainty how these things are going to go. All we can do is let the market tell us what it wants to do, and then we adjust. That is all we can do. We are followers. We are not leaders. The market doesn't care what we think, and we have no control over the price. This is more a game of chance than it is a game of skill. Understand that, because people think that this is a game of skill, and I can understand why. You pull up any internet article, any YouTube video, and it's all this idea that this is a skill is baked into everything. You'll read things that say things like, all you have to do is learn this, this, and this, and if you learn it right, you'll make millions, right? That's the idea that they try to sell, but that's the furthest thing from the truth. If this was a game of skill, or more of a game of skill, because there is some skill, but it's not predominantly a game of skill. If that was the case, people would be able to quit their jobs, or at least see some type of progress, over a year or two, because it's easy to learn how to read a chart. Anyone can do it. Okay, it's easy to learn how to use a stochastic oscillator and all these other nonsense tools. It's easy to learn them. All you have to do is Google some stuff and you'll get enough information and you'll understand how it works. If there was a skill to that, then there would people be quitting their jobs and doing this and actually showing progress. Just like when you learn a trade, right? You go to trade school, you learn a vocation, and you start out as an apprentice, and you get paid a salary, and as you over the years you get better at your skill and you get paid more money. That's a skill. It's not a game, but it's a skill. So a game of skill implies that you have control over your outcome, and we have some control, and that control is the risk part. Okay, so that's really where the skill needs to be focused. People think that the skill is, how to interpret a chart. How to use this oscillator, how to use that one. I have 10 moving averages. I just have to have the right ones. That's all just nonsense that the industry loves to feed you because it's good for the industry. It's not good for you. Same with fake gurus. Why are there so many of them? They're good for the industry because they stimulate trades. It's not good for the retail trader, but no one cares about the retail trader. The retail trader is a source of profit for others. Understand that. That's what we are as retail traders. So the more you understand that, the more you'll realize that the information that is being fed to you is nonsense, and that the real information, we can extract some actionable information from a chart, but it's very limited what we can pull. All right. And then, of course, the other part of this skill is how we manage risk around that information. All right. So that I covered ACX. I answered that question. Let's go to Peter here with silver. So silver, again, XAG, is going to be a function of the dollar and gold. Look at that getting hammered. How much is that? 23.63. Yeah, okay. So again, silver and gold, I don't know why people would buy these things with the dollar doing what it's doing, right? So this thing is going into support levels, yes, right? Look at these old resistance levels. Going into support level. Those are support levels, right? See that? So that's all interesting and attractive, but the environment is not for these things at all. So if you're going to buy into that, you can't expect much. That's why I wouldn't bother with these. If anything, the thing would be to short them. All right. Now, would I short gold? I would short the CFD if I got the right setup. Not at these levels, right? Just like Bitcoin, you don't want to short into a low, but any reversal, any retrace into this area here, right? That would be one potential area for a short idea, a swing trade short idea. And again, people, how could you short gold or silver? Inflation, no inflation, dollars going higher. These things are going to be pressured, right? So they're going to be very limited as far as where they go. If there's any ridiculous rally, because again, markets are irrational, you have to look for the imbalance areas and wait for those setups. That's all I can say. So silver, while it is at an area of interest, not I'm not interested in longs, okay, because of the general environment. Does that make sense? So I hope that answers your question. All right. So let's see. Wedge from New Smyrna Beach. Of course, is boring over there. I'd like to be. I don't mind boring on a beach. That's nice. All right. Let me see here. Okay, I covered euro. So, oh, from Hong Kong. Hey, welcome. I don't get too many people from Hong Kong. So you want to see dollar yen? I don't get that one very often. Now, dollar yen. Look at this. So I remember that the dollar yen used to basically reflect like the stock market at one time, but obviously not anymore. Look at this. So dollar yen, this is the dollar. This is the US dollar, right, against the yen. This looks like an altcoin. So what do you do with that? Well, certainly not short it, right? This thing is nuts. Not, you don't short this. So you're going to have to look for support levels along the way here. All right. You'd have like a minor one in this area right here. What is that? 106, something like that. And if it can pull back this far, I'm sorry, that wasn't 106. What was that? 125. I'm sorry. 125 area. This thing right now is at 128. So yeah, like 125 area. And then like this area here, 120. But the likelihood of it pulling back that far with this type of trend, this is a trend, right? So you want to look for pullbacks and you want to look for longs in something like this, just like the dollar. This would be a nice way to play the dollar. Not if people are going to make the mistake of shorting this and they're going to be like, oh yeah, how much higher can it go? It's too high. Not with the dollar and interest rates right behind it and the Federal Reserve right behind it. Okay. So yeah, I hope that answers your question. Oh, cool. Thank you. All right. Stock, BTU. Well, freeloader, I answered one of yours. So I'm gonna let me move on to another one. I'll see if I can come back to that or ask it again. Okay. I don't know if this guy's making fun of me. Can you check Ethereum? All right. Ethereum. Let's take a look. So hold on a second. I'll pull up Ethereum. Now, again, Ethereum, as we know, is what? It's a Bitcoin follower, right? So everything that I said about Bitcoin is going to apply to Ethereum. Let me pull up my Ethereum chart. Look at that, right? It looks just like it. It's just the right chart. Let me see. Oh, I think I had the chart. I think it's this one. Yeah, it's this one. Must be this one. Yeah, okay. So Ethereum. That's Litecoin. Hold on. What am I doing here? Ethereum. All right. Yeah, there we go. So it looks just like Bitcoin. Same type of outside bar reversal. Nice failed low situation. Okay. So that same aggressive trade that I talked about in Bitcoin will apply here. I mean, Ethereum seems to be like relatively stronger, compared to Bitcoin. You're at the midpoint of this range. But yeah, I would consider this, it's either, I wouldn't take both. It's either one or the other, Bitcoin or Ethereum. Now, if you take something like this, again, your risk would be defined by the low, 27.97. You should round that a little lower, 27.50, right? The high of this candle is 30.26. So 30.50, once this candle closes, 30.50 would probably be a good level for the buy stop. Now, again, I'm not giving you trade advice here. This is a potential idea, and this is the kind of thing that I would, share as an idea. But again, the candle must close, and then the question is, how far can it go? If it goes anywhere, it may not go at all. The next candle may turn into a sell signal, right? Keep that in mind. Like everyone gets all excited, like, all right, here it goes, and the next candle turns into a sell signal. You need to be prepared for that, right? So anyway, if this thing goes, you want to make at least 1-to-1. That's what you're looking for. That is your goal. If you're going to make the mistake of thinking it's going to go up here, you're asking for too much. While anything is possible, that's a lower probability, right? And that's what really we have to look at. Probabilities are something that we cannot see. So people usually don't consider that. They're only interested in what can I make right now? Okay? Don't do that. Don't be like the herd. So that's the situation that you're dealing with here. So it's an aggressive swing trade long. A more ideal level on something this obviously would be like around this area here. What is this low here? The 2,500 area would be probably equivalent to the 3,500 on 35,000 on Bitcoin. So just something to keep in mind. Now look at this, just to give you some perspective. This is a weekly chart on Ethereum, right? I mean, that's a weekly outside bar. Today is Monday. It's the beginning of the week. But so, you have a potential higher low, but this thing is probably in a consolidation. So that's why no matter what the fake gurus say and this and that, you have to consider the bigger picture and you have to consider the environment, right? The environment doesn't favor this thing going back to its highs. Not anytime soon. Where is that money going to come from? Right? So we need free money for that. We need money floating around all over the place. We need people that have so much money that they buy NFTs with it, right? That kind of nonsense. We don't have that right now. So, and that all begins with the Fed. All right. So again, aggressive swing trade idea. I explained it. I hope that helps. So yeah, Dan, if BTC closes like this, right? I explained that whole thing, right? That was my whole point of my Bitcoin analysis. Thank you for asking. Alex, can you take a look at also MHK? Okay, wave count. All right, so I'm going to take a look at the first one. All right, what is this here? Hopefully I got the right one. NASDAQ stock here. All right, so let's take a look at the weekly chart first. Look at this. Look at this bearish structure, right? Lower highs and lower lows all over the place. You're fighting a bearish structure. So even though you may have a bullish setup developing, there are better charts out there, right? I mean, so let's look at the daily chart here. So I could see why you'd bring this up, right? Possible failed low type of thing going on here. Outside bar trying to develop. But in order for this thing to really get going, you need to clear that resistance right there. What is that? That's 49.82. Basically $50. This thing right now is at 35. So there's some, I guess you could say, some short-term potential in there if you're interested in a swing trade. But I wouldn't go nuts with these. Again, it's a stock, and it's a stock that has a general bearish structure. The structure's trying to change, but it hasn't proven itself yet, right? In the face of the environment that we're in, you're more likely to test this low again at some point, $23. It's more likely if that S&P breaks 4,200. These things are going to suffer. All stocks generally will suffer when the S&P sells off, right? That's just the way it works. So something to keep in mind. So look, I don't want to, if you were thinking about going long, I don't want to take that idea away from you, and I don't want to scare you out of it. Just understand the limitations and the risk. That's all. And if you can accept that, then hey, that's within your criteria, and you can take that idea. Does that make sense? All right, let's move along here. So I got Ethereum. When is a good time to buy bonds? Not now. For bigger picture, not now. We may be at a bottom of those bonds, but it's got a long way to go before it proves itself. Elon Musk bought Twitter today, so that's why dodgy. Oh, okay. Yeah, so someone mentioned Twitter here, right? Wedge. So let's say TWTR. So he actually bought Twitter. Interesting. So I guess he's going to clean this garbage company up, because, I mean, talk about garbage of the garbage. You know what one great thing about Twitter was? You can get a good sense of the herd mentality in there, because people are so mindless that you could actually use what people put on there from a contrarian perspective. That's the way it is with all public information, right? Especially public forums where people want to share their opinions. Usually people are wrong because people are irrational, right? Twitter was a good source for that. But it's good that he bought it. All right. But as far as buying it as a result that he bought it, if you're not in that, forget it. Okay, the party's over. So people are reacting to it now. But if you notice, Twitter has been this gap that you have right here. That right there, people obviously knew early, right? If you weren't in this part, then you're wasting your time now. Because now all you're doing, if you buy this now, all you're doing is taking it off the hands of people that bought it there. By the way, there's a nice wave structure here. Now, for my wave count people, for the Elliott wave people, when I use Elliott wave, I don't get caught up in the complex nonsense. There's a lot of complexity with it. It can be very subjective and confusing. I look for clear structures. If the structure is not crystal clear, then I don't look at it. All right, I resort back to structure and levels. So wave one, this is wave two, this little consolidation. Then what do you have? You have a nice wave three with a gap inside of it. Okay, wave four pullback. Now we're in a possible five, right? So once this completes, you got to be nuts buying this thing. So it's got a little bit of room to go, right? But this thing, a completion of wave five, may be just slightly higher than this high. So people buy into this thinking, oh yeah, Twitter's going to triple now and blah, 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 because some moron told them it's going to triple and blah, 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 right? Meanwhile, a broader corrective move is more likely to follow. So I would leave Twitter alone, especially because it's got all that drama and all that hype in it. Does that make sense? But I'm glad he bought it though. All right. So let's see what else we got here. Can you look at XMR? Yes, XMR. Someone asked me about this because someone mentioned that there was like some kind of pump nonsense going on. Now look at this. So Monero, right? So Monero is reacting to Bitcoin right now. Look at the bullish pin bar. Okay, so it's the same deal as Bitcoin. If you buy into that bullish pin bar, right? Pin bar closes, you buy the high of that break of the high. The low of the pin bar becomes your risk, 237, right? Now, if this thing does not follow through and make a higher high, theoretically, that's what it should do. Let's take a look at the weekly chart real quick, right? Theoretically, this thing should go for a higher high, but you're asking for a lot of trouble in this area. Look where you are, okay? As Seinfeld would say, look at the resistance levels. So that's what you're buying into, okay? By buying that. So understand that those are your limitations. If you can cover your risk, right? If you want to take that chance, and you're fighting a bearish pin bar from the week before. Look at this. Okay, so even though you're getting a potential bullish pin bar here, you're fighting a lot of not so beneficial locations. Does that make sense? So it's aggressive, right? People are going to focus in on this. They're going to say, oh, look, but it's a bullish trend. They're going to focus in on their oscillators, which are going to say, oh, it's a pullback and blah, blah, blah. But all that stuff is pretty meaningless. You have to look at the resistance levels ahead, and that's how you measure your potential. That's what you're dealing with on something like this. So that's up to you if you want to deal with that. I would rather just get involved. If I'm going to do something aggressive, I'd rather do it with like Ethereum, right, or Bitcoin. Anyway, okay. Hey, Sean, good to see you. All right, let me see what we got here. All right, I got a few more minutes. I know I missed a lot of questions. I apologize, but I have to wrap this up here momentarily. But let me get through a few more. So Sean, SPX, right? Basically, SPX is going to be the same as this one, okay, the CFD. This is the chart that I shared earlier today with that blue line on it. You see the blue line? Sean, you can see that for yourself. I shared this and I said at that point, the candle was there, right? We had a red candle. I said, this is not a place to go short. Look at the location. And it took some time. And now where we closed at? 42.96. We were at 42.03 earlier today, like around noon. We were at 42.03. This thing went as high as what? 4,300. So that's quite a reversal, right? And again, no one sees that coming. I had no idea that it was going to reverse like that. All I knew was that was not a location to go short, and that's what I told everyone. Don't short this thing here. You know, wait for some type of something to reverse or something. Well, there it is. Okay. So anyway, thanks for asking about that. Again, the bigger picture with this, while we have this reversal and everyone's going to be excited about that, and you're going to get all your bulls coming out in this net, the potential is limited, right? So your resistance is going to be around here, which is what, 44.21, 44.50 area, something like that. That's going to be the place to start looking for shorts if it can reverse there, right? Something like that. That would be one area, just like the NASDAQ before, or up this scenario here. What is that? 45s, mid to low 45s. If it produces a reversal formation in that area, that would be a good place to consider shorts. Or if you're long something, a good place to unload. Does that make sense? Or reduce risk? Okay, XRP. Milad wants to see XRP. All right, let's take a look at XRP real quick. XRP, another garbage coin. Look at this. So XRP, this one is having a hard time coming back, as you can see. Look at the bigger picture. This is the weekly chart. Yeah, you're getting that bullish pin bar develop, but look at the structure, right? You have a failed high right here. Let's go to the daily chart. Again, you're fighting something that's generally weak. There are better charts out there, right? Like I said, if you're going to do it with Bitcoin, do it with Ethereum. This is a failed low, but you're a failed low in something that's just been garbage, right? Your potential can be measured there at 79 cents. The high of this current candle is what, 69 cents? So maybe 10 cents. I don't know, not worth it. I really don't think it's worth it. Yeah, so you have the buy signal developing. Of course, the candle needs to close. The high needs to be taken out. But I think there are just better products or better markets to do it in rather than XRP. I hope that makes sense. All right. So I'm going to wrap this up. Let me answer one or two more questions. Let me see. Elon, that's probably true. Something about Elon implementing Dogecoin as a rewards-based system for using Twitter again. Okay. Right. So hype, nonsense. 40% of people get their financial advice or education from YouTubers. That's, who's that good for? Certainly not them, right? Not the user. It's good for exchanges. It's good for brokers. It's good for vendors. It's good for the industry. That's who retail traders get their information from. Again, fake gurus. Fake gurus basically have replaced, the brokers of 20 or 30 years ago who used to call you up on the phone, right? A broker used to call you up on the phone and tell you a good story to stimulate you to buy a stock, and they would make money on the commission, right? So today, you have fake gurus that have basically taken over that role, except the fake guru doesn't have to make cold calls. A fake guru, all they have to do is make videos, and the YouTube algorithm will spread their videos, and it's a little easier than making cold calls. All right. Anyway, I can't believe people still believe that nonsense, but you know what it is? It's an emotional thing. It's a need for hope. And fake gurus deliver hope. That is what they do. Really evaluate their messages when you watch them. If you watch them, you shouldn't watch them because all you do is reward them with watch time, and then it helps them spread their videos. But they stimulate the trade activity, and they create a herd mentality. They help amplify it, and they help professional traders get out of their trades, is what they do. All right. Or reduce risk. Okay, I have a problem. If you can give me your observation, I buy Ethereum tokens, and the time is price is 450. Now the price token is 33 USD. I have no idea what that is. Ethereum up? Is that a coin or something? Don't know what that is. All right. I was not making. Oh, I've never heard of you before, but I like. Oh, okay, cool. All right. I can't tell these days. Solana. All right, so I'm going to wrap this up here. Let me see. Yeah, I'm going to wrap this up. I apologize if I missed it. I missed a lot of questions. I see a lot of questions here. Mark from New Zealand. Hey, what's up? Okay, let me just see. Dodge pump from Musk buying Twitter, maybe. Right. Okay. David, good afternoon. Which do you like better for a bounce? TLR? Oh, pot stocks. Well, Tilray at least has more, generally, at least used to have more potential, but Canopy Growth is the leader in the industry. Are those things moving? Because those have been the worst of the worst. Garbage. Ugh. Possible double bottom, but yeah, there are better choices out there. If you're going to try to play a bounce in something, find something that's at least relatively strong. Buy the SPX, buy the SPY, the ETF outright, right, following the S&P. Yeah, I wouldn't touch those pot stocks. Is only strong against other fiat currencies. In real inflation, 50% in silver and gold. No, nonsense. Okay, nonsense. Don't get caught up in those fundamental opinions. If the dollar is maybe you may say relative to other currencies, but it's still strong. And as long as rates are rising and it's still strong, gold and silver are going nowhere. Okay, because they're going to be pressured by the rising rates, right? And the the boosted dollar thanks to rising rates, right? So the dollar is still the world reserve currency, and the Fed is doing its job to fight inflation. That is what they're doing, right? So we can argue, oh, 15% inflation, 50% inflation. Yeah, sure, we have inflation, but the inflation is going to back off now. Have you seen oil? It's at $95. Oil was at 112 or 125 not too long ago. It's backing off. Why? Stronger dollar. Okay, so yeah, don't get caught up with that nonsense conspiracy theory garbage. All right, it's all irrational nonsense. You go by what the market delivers. I go by price, right? Price doesn't lie. Price is price. And that's what I go by. I don't go by opinions. I don't care if this person has been in the gold business for 100 years or 50 years and all this other nonsense, and he must know what he's talking. No one knows anything. So price tells me what to think. I have no opinion. Okay. Anyway, all right, people. So again, I see lots of questions with all these altcoins. I apologize. TradingView people, you have to come here earlier, right, and ask me these questions earlier. I mean, I sat here for 15 minutes talking to the other people, and there were no questions in the TradingView channel. So I don't know what to tell you there. I'm sorry. I apologize. Okay, but I have to wrap this up because otherwise I'll talk for hours. And some people have people from Australia in here. It's like 4:30 a.m. over there. They have to go to sleep. So anyway, all right, people. So I want to thank you all for spending some time with me here today. I stream every Monday, so if you're new, just come back next Monday and you can ask me a question. You can reach me in other ways if you have to. It's hard for me to get back to you sometimes. I got a lot going on, but again, I appreciate you taking some time with me here today. I hope you got something out of the stream. Okay, my goal is for you to come out of here with some form of preparation. Right? I want you to be prepared for what is likely to happen next. People, of course, they want me to tell them where the market's going to go. I have no idea where the market's going to go. I want you to be prepared for potential scenarios so that if the market offers such a scenario, you at least have an idea of what you should be looking for and how to manage your risk, okay? Because that's what this is all about, managing risk and protecting capital. The better you get at that, the better outcome you are more likely to have. All right, everyone. So thank you again for taking your time with me here today. I'm just looking at the other chat here. Yeah, so 3 p.m. EDT, 3 p.m. New York time on Mondays, I stream. So you can catch me on here and you can ask me your questions again, okay? So again, wherever you are in the world, enjoy the rest of your day, the rest of your evening, and thank you very much for watching. I appreciate everyone, and I appreciate everyone's great questions. All right, and enjoy the rest of your day and the rest of your evening. All right? All right, I'll talk to you next time. Have a great day. I'm going to turn this off now. Thank you for watching.